Hello everyone, this is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 95 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988, and in 1989 developed the first conduit from epoxy resins that had fouling resistance and low smoke characteristics. This met the most stringent codes and specifications. Episode 95 looks at some of the early results from our 2024 Top 150 Distributors survey that will be published later this month. This podcast will also provide updates for the 5 key weekly indicators that we'd like to track. Initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to Champion Fiberglass for sponsoring today's Electrical Economy podcast series for 2024. In the most recent data for the week ending April the 27th, the advanced figure for seasonally adjusted unemployment claims was 208,000. That's unchanged from the previous week's revised level for the initial unemployment claims. The 4-week moving average for these claims was 210,000, a decrease of 3,500 from the previous week's revised average. The March 2024 unemployment rate stands at 3.8%. We had 6 states that had decreases in unemployment claims of at least 1,000 in that recent data from April the 27th. These states are the state of California, down 4,563 to 40,464. Massachusetts was down 3,361 claims to 4,752. Rhode Island was down 1,619 to 861. Oregon down 1,412 to 3,677. Connecticut down 1,349 to 2,890. And the state of Texas now standing at 14,272. That is a decrease of 1,253 claims. We only had 2 states with notable increases in unemployment claims in the data for the week of April the 27th, and that is Iowa, increased claims to 1,555, now standing at 3,104 additional advanced initial claims, and the state of Illinois, up 1,279. They're standing at 8,723. New Hampshire, New York, and Kentucky also had increases, but they were below 500, and on the whole, I guess you might call those comparatively insignificant claim numbers. An interesting leading economic indicator for the overall U.S. economy is freight rail traffic. It's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR. It publishes this data weekly. Total U.S. weekly rail traffic was 476,302 carloads and intermodal units. That's up 0.7% compared with the same week of last year. Ran Jahad, chief economist at the Association of American Railroads, said in the press release, U.S. rail carloads have declined in April primarily due to decreased coal shipments. Excluding coal, year-over-year carload volumes have experienced a 3-month consecutive increase. In April, out of the 20 carload categories monitored, 9 showed growth, with several experiencing marginal declines. Additionally, sustained consumer spending and heightened port activity contributed to the 8th consecutive year-over-year rise in intermodal traffic for April. Most of the individual freight categories showed increases in the most recent AAR data. Intermodal units and petroleum products showed the largest increases of more than 9%. Motor vehicles were up 5.6%, and chemicals of up 4% also showed notable increases. On the downside was, as we mentioned before, coal, which was down 17.3% compared to this time last year, and non-metallic minerals down 7.6%. Total carloads were down 4.8%. If you track the oil market, you're probably familiar with the Baker Hughes rig count. It tracks the oil and gas rigs that are operating. This data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It gives you a good sense of just how many of the large oil plays are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. Over the past 12 to 18 months, the Baker Hughes rig count really hasn't changed much week to week by more than a rig or two. That's why this week's change of a drop of 6 rigs stands out a little bit more than what's been going on. 4 of the rigs in this drop were in Louisiana, and the rig count in all of the other major oil-producing states and the largest oil basins was not changed by more than or down by a rig. Year over year, the total U.S. rig count for oil and gas rigs stands at 613 rigs in total. That's down 142 rigs from this time last year. The Permian and Eagle Ford Basin in Texas, and in the case of the Permian and part of New Mexico, account for 66 of these rigs. The Haynesville Basin, which straddles the Texas and Louisiana state lines, is down 29%. It seems like there's always a lot of chatter and concern about the price of oil and the state of domestic oil production. But the current price of West Texas Intermediate Crude Oil, or WTI, as of May the 6th is $70.75 per barrel. That is only a dime less than the one-year average price of oil, which is about $78.86. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future activity in the U.S. economy because copper is used in so many industries. The construction industry is among the leading markets for copper because of its widespread use in wire and cable and plumbing pipe. Copper prices on the COMEX exchange for Monday, May the 6th hit $4.51. I thought I would pull up a 10-year chart to highlight and remind us all just how high this is compared to the long-term trend line over the past 10 years. We are now at a level of activity not seen since the relatively brief periods in 2021 to 2022 and a bit of 2023 when copper prices lived above $4 a pound. As you can see, the current trend line is well above this 10-year line, which is illustrated by the yellow line, and that is at about $3.15. It's always tough to make a call on the reasons why copper prices change dramatically or are staying at a fairly elevated level, which is where they are right now. And copper is a global market and can be affected by union strikes at mines, global conflicts like the war in Ukraine, or surge in stockpiling by China. And China doesn't report how much copper it has in reserves, so that's always messes with the figures a little bit. We certainly have all heard about the increase in demand for copper because of EV batteries and how much that is expected to ramp up in the future. John Gross, the publisher for the Copper Journal and a contributor to Electrical Wholesaling, has followed pricing in the copper market for many decades. He sees some uncertainty in the futures contract despite where we're at with the current high level. Here's what he said in his most recent report, which was published on May the 5th. Something is happening in our metals markets and our equity markets and quite possibly our overall economy. Let's start with the simple stuff. To do this, we have to go back to basics. Our last copper price report noticed that the odd closing price of copper in the nearby mines, wherein a backwardation came in and was gone as the April contract went off the board. Last week, however, it magically reappeared with the May and June contracts. On Monday, April the 29th, it closed at $4.65 and a fraction of 90 per pound. And the June contract was at $4.66 a pound, a little bit less, resulting in what's called a $1.05 contango. The following day, the spread went into a 15-point backwardization and continued to widen, with the spread closing at $1.25 backward on Friday. Like a check engine oil light, a backwardization is a warning sign that something is changing in the market. It could be nothing or it could be something significant. A backwardation typically indicates a market tightness, but the question is, which market? We have the physical market for copper, where real people buy and sell real physical units of copper, be it refined scrap or mined metal. However, the physical market is not exhibiting any tightness. The other market is a futures market. Here's where people buy and sell copper with the click of a mouse. In this market, we have hedge funds with high-frequency trading or algorithms programmed to respond instantly to changing market conditions with a cold and calculated and unemotional approach. And now we have AI getting into the game. So what's driving this inversion in copper? We don't really know, and we doubt that anyone else really knows either. The important thing is to keep an eye on it and not get caught on the wrong side of the market. One of the biggest editorial events for us folks here at Electrical Wholesaling is our annual Top 150 Distributors Survey. I'm working through the survey returns from our Top 150 Distributors report that will be published later this month, and I have enough returns that I can paint together an interesting picture of what distributors' perceptions are of the electrical market, the key business factors affecting the market, the U.S. economy, and some electrical products with some good growth potential. Of the 40-plus electrical distributors who offered a 2024 sales forecast, roughly a third of the respondents are expecting double-digit sales growth. That's significantly over the industry's historical growth average of between 5% and 8%. And it's interesting to note that in the survey so far, more than half of the respondents are expecting growth right in that range. And actually, it actually bumped it up a bit of the respondents. They're looking at growth between 5% and 9%. And that was about 50.9% of all respondents are right in that sweet spot. I found distributors' opinions on some macro and, in the case of URP investment, technological factors to be interesting. We asked respondents to identify each of the following trends by degree of impact, whether it had significant impact, some impact by not losing sleep over it, minimal impact, or no impact. And we asked them about longer than usual lead times, rising product pricing, the presidential election, the impact of remote officing on demand for new office work and or office retrofit work, hiring the next generation of employees for the company, and investing in company's computer system to keep pace in an increasingly digital world. And when you look at the graph in the slide here, the light blue is significant impact. Some impact is in red, some impact but not losing sleep over it is how I termed the question. Green is in minimal impact, and purple, no impact. If you look at longer than usual lead times, the most prominent response was minimal impact on lead times, which is interesting considering all that's been happening with the going on with the switchgear. And when you look at rising product pricing, that is also checked in at a fairly minimal impact right now. And I guess if you're familiar with the electrical marketing price index, you can see that for the most part prices are starting to lessen. The presidential election also came in pretty strongly at a minimal impact, and over 40% of them saw it at that level. The impact of remote officing on demand for new construction and or office work, also pretty even, all things considered, under 30%, having no impact or minimal impact, having some impact, not losing sleep, about 10%, and just under 10% we had showing significant impact. The interesting note, I think, for me of all these questions was the impact that hiring the next generation of employees for my company. When asked that question, distributor exec said over 40% saw that as having some impact by not losing sleep over it. I would have thought that might have been a bit higher. Also fairly high was some impact was the investing in my company's computer infrastructure to keep pace in an increasingly digital world. Distributors also gave their thoughts on business prospects so far in 2024 for key end user segments. 50% of respondents said new industrial construction and commercial new construction were showing growth. 40% said commercial retrofit was lagging the market. As you might imagine, only slightly over 20% of respondents saw residential new construction as showing a significant amount of growth. Also showing with some activity in lagging the market, it was a commercial retrofit, as we mentioned, that was down slightly. Residential retrofit, for those distributors that were involved in that came up slightly higher. And also looking at industrial OEM, about 30% said that was lagging the market. Industrial OEM actually came in fairly strong too, because it was about 40% said that they actually saw some growth in that particular market. Despite some of the negative press that the EV market has seen recently, distributor execs like what they see in this market for opportunities in EV charging stations for commercial, retail, and municipal applications. Other distributors cast votes for lighting controls for the commercial and institutional market assemblies, and also the pre-assembled electrical products as key market opportunities for them. EV charging stations for resident applications did not really resonate, as you can see on the chart there. Actually came in with well under 5%, saying that was a good market opportunity going on right now. We actually saw a fair number of markets that came in that were not mentioned specifically in the chart, but distributors did write in on them. They said that selling legacy technology, industrial networks for projects to upgrade bandwidth or security was hot, and also that school and government spending is coming in strong right now. Distributors had a reasonably even take on the question of where do they see the U.S. economy in 2024. About 46%, which is actually the largest single category respondents, said 2024 seems like it will be a solid year for the U.S. economy. More than half of the respondents said they did see some signs of a slowdown in the economy. 15.9% said the economy is contracting in second quarter of 2024, and close to 39% said they think they will see a slowdown in the overall second half of 2024. It's interesting to note that not any of the 40 respondents said they are looking at a recession in 2024. That wraps up our podcast for today. A special thanks again to the folks at Champion Fiberglass for sponsoring today's Electrical Economy podcast series in 2024. As always, please contact me if there's any other type of economic data you would like us to cover in these podcasts. Our next presentation will be on May the 20th, 2024. Until then, stay healthy, be happy. Look forward to talking with you in 2 weeks.